Good morning, everyone. Oh, how's everybody doing? Hey, Sadiq, Moran, good to see you all. What's up, Raj? How's the drive? Good, good, good. Well, we're gonna try changing the format up a little bit on these streams. Um, First of all, I I know the chat is still up there. For the life of me, I can't disable it, but I'm not going to be looking at it. So, hello to everyone who's joining us on YouTube, and we welcome you to come into Trading Syndicate, join our room. We've got a 3-day free special going. If you are interested, you want to learn how to do this, we are willing to teach you. So welcome everyone. Welcome to the folks in the room. What I'll be doing from now on, I'll do about an hour for the morning session, and then what I'm thinking of doing, folks in the room, let me know what you think. I'm going to cut the sessions down from an hour and a half to an hour. And then at 11 o'clock, I'm going to I'll do a special session every day at 11 in the room, and we'll cover something like I have a subject for today. I think I have a coaching session at 11 o'clock, but I'll let you guys know. Just double check. And that way we can, I'll split up the time a little bit so we don't waste a lot of time on YouTube. Cool. Yeah. Start focusing attention where we really need to. So let's take you through it this morning and see where they hid the cookies. Now, yesterday we had a liquidation profile. And we had the great liquidation of 2026 continues. Markets try to find the bid. And it tried to find the bid. It's going to be a process. It's kind of like drilling for oil, right? Sometimes you don't, the first hole is a dry hole. So we did a little bit of a look below and fail of yesterday's low. That was a nice long trade. And yet we're right in the middle of yesterday's cost basis. Yeah. So we are going to open inside yesterday's range, inside yesterday's value area, which I call cost basis. So that means business as usual. So the trades we're going to be taking are going to be back and forth trades that we would have taken yesterday in cost basis. Yesterday's cost basis laid out the groundwork, showed us where the sellers are, where the buyers are, all of that. So all we have to do is follow that today. And if we break out of it, do we come back in like we did in the overnight, or do we break and go? Right? Same applies for the top if we get up there. Okay. That's what we're looking at today. We're looking at it inside day. And right now we are just bouncing back and forth over VWAP. Yeah, I'll start this schedule on Monday. So we'll do for these, we'll do like 9 a.m. to 10 a.m. Eastern time. Take an hour off, and then from 11 o'clock, it'll be a Zoom link in the room for the people who pay for the room. And then you guys will get a little bit more value that way too. And I've come up with things for you to do every day. I've come up with homework. Alrighty. Yeah, there's Moran. Moran went on holiday and came back as a 14-year-old. She's come back as a teenager. Hey, what's up, Juan? Welcome to the room. Jam, there you are. What in God's name are you up to this morning, Jam? Yeah, don't worry about that. Just leave that alone for now. Okay? Alrighty. Oh. I kept the same cost basis. Let's go take a look. Thank you, Kevin, for reminding me. Cost basis was up here. This is what I did the cost basis. Whoop. I used this. I was up around here, and I saw that 66, 64 3/4 to 69 and 3/4. Double it to the downside here at 54 3/4. Double it again, and then double it again all the way down. So 8 times discount is down there at 65.94. It's had a couple of runs in the overnight where you'll see very responsive buying. You know, that big liquidation down, that's the one that we looked at in the overnight session. Distribution, another sale, took that low out, came down. It's really, if you get caught in the wrong place in this market, it's going to cost you, especially if you're stubborn, because the moves are big. So just be aware of that. Now, I'm not trying to make you nervous or anything like that. I just try to make you be a bit more, oh crap, what do I mean? It's responsible, right? Be responsible with your money, you know? Um, Trade smart, folks. You know, trade smart. So let's see. What are we going to do? What are we going to do? Where are we going to take trades? This is an edge. 34 and 3/4 an edge. It's very mechanical, Al. It's very, very mechanical. Hey, look at this. Check it out. It's so precise. They sell here. Like, I mean, if you came in and you went, okay, I want to do a cost basis now, right? JJ's cost basis is from 8 hours ago. That's cool. If you wanted to do up a cost basis now, there's your cost basis, right? It's this little box, and I think the point of control is down here as well. Yeah, there it is. So the overnight point of control was up here. Inventory was long. Then they had to put it on sale. So this would be a great place to draw your cost basis. So if you're just starting out, see, you don't have to use the same one as mine. Eventually they'll line up and tag each other because the inventory is all the same. The inventory's been the same for the last 10 years. Nobody realizes that. But the inventory has been the same for like a decade. Right? Ever since I started doing this, the levels from 2020, if they work in 2026, within a couple of ticks, stuff doesn't change. It's the same product. Right? So how do you trade that? Well, if you were trading it now, just go in and draw a new cost basis, right? You could draw, let's say, so that could be your opening cost basis. Yeah, and it's not that I'm brilliant or anything like that. It's just that the market is very, very well traded. It's a very well constructed, very well maintained market. This market you can think of like the edges in Edward Scissorhands. Look at that. Cost basis, we went up and we got almost 2 times, but we got basically 1.5 times profit. Then we had to put it on sale. 1.5 times. We know that there's sellers up here at 66.46 now. Why is that important, JJ? Why should I care where the sellers are? Well, because if you're long here and the market makes a nice move up and you don't sell 66.45 and the market comes right back down to where you bought it, well, then you haven't really done good business, have you? Yeah, and you know why that is? Right? Do you know why there's a large amount of liquidity when the lows come in on a higher time frame? Because there's more people waiting at that bus stop to get on the bus. That's where you can get rid of some size or buy some size. If you're short, that's where you can cover some size. Like late at a monthly low, at a quarterly low. Because everybody, his dog, his cat, his pet alligator is going to be using that as an out. Stuart, we had some problems with OBS this morning for the London session, so there is no recording. And you're lucky because the recording sucked. Because I was not on my game. Luckily, I had some issues with the software. It probably would have hurt you more than helped you. Yeah. So, full disclosure, sometimes you just get out of bed on the wrong side of it, and then the technology's not working, and you're like, oh my God. I learned that from Dick Cheney, Jam. He he was our mentor. Okay, I'm not allowed to get political. I just think it's funny. Lord Vader himself. All right, so now the position is at 66.37, folks. So position is underneath us. If we could stay above VWAP, I spoke too soon. So now, look, you have information before the open. 11 minutes before the open, you now know that there's a seller at 39 and 3/4 40. Right? It's as plain as the nose on your face. So we're using this as a balance just to show people how we trade this. Right? The beautiful trades will be a look below and fail when it goes underneath 33.5, comes back up, you go long 34.35, sell into it at 36, 37, 38. Right? The trades are not complicated, but they're not easy. Nothing in life is easy. Right? Oh, man, I'm ready for this weekend. I don't know about you. What's going on? Oil 95.39. Yeah, I'm always wondering whether I'm looking at the right oil contract. I'm using TradingView and just getting to know it a little bit. Coin of bitterness staying over 70,000. That's good. Tesla 380, Microsoft 389, Crab Apple 248. I haven't even looked at equities. Like seriously. Yeah, everything just kind of looks like, we got a couple of minutes. Let's go take a look and see what these markets are doing. AMD. Well, these markets are all just a little lower. They're all waiting for information. Going sideways while they wait for some order flow. Meta 605. PLTR. It's a nice move up from 130s. Silver. Tesla under 395. Leather jacket guy. We might have to flush this 180 hard. I don't know, but every time I think this stock's going to go lower, it gets to 172 and it just boom, it hits the brakes at 172. It's like this thing is like just everybody just stopped selling at 172. Yeah, it's stuck. So, because I don't understand the business, I just have to rely on the chart. Right? I have no idea about their technology or how to even accurately gauge their tech, so I just have to let the chart tell me what's going on. Gold. I posted a beautiful look below and fail trade on gold when it came under 46.24 and came back up over it, up to 47.37, where the sellers were definitely going to be. Check that out. It's posted in the room. Hey, Dave, what's going on? You started the weekend? Good for you. Oh. Do I have VWAP in the wrong place? Thought I had it in the right place. Let me see. I thought I had it anchored at... Oh, wait a minute. Why is it anchored at 7 in the morning? That's wrong. Sorry, guys. Stay with me. How did that happen? Oh, I swear to God, Fridays. There you go. There's your 47. There's no Lambos in the back. Not where I live. There's some rich kids from the Middle East who have like Benzes and stuff, but no Lambos. What about 6640 to 34? What about it? It's a cost basis, Flex. Is that what you're asking? So if we hold 6639 and you're long, there's going to be some sellers just before 44. You can see where they're going to sell into it. And if it's slow and there's not a lot of big buyers, they're going to sell into it there, there, and there. And then, of course, VWAP. Guys in the room, girls in the room, you guys getting that? Can you guys still hear me? Check, check. There's the trade. Just told you. There you go. If you were long, you should be selling into this in the 45s. Beautiful, beautiful. Yeah, I thought I had my view up. I remember anchoring it this morning. I must have moved it by accident. Annoying. There's VWAP. Nice. Okay. Just wanted to make sure that you guys heard me. Sometimes I'm going to be poking at you guys a lot with a stick in the trading room. Because we're trying to make this get some back and forth going so we get you actually talking about the trades and the execution. Now we're going to take the product that we have from 34, 35, 36 all the way up to 40, and now we're distributing it over VWAP, and you'll see whether that new balance zone works. Okay. On liquidation, we will most probably come back to that 42 area first. And if 42 breaks, then you're looking for 39 and 3/4, 40. Yeah, I haven't seen you. I see you like once every couple of weeks. I am listening. So now, you would think that shorting this area, say I put out a few shorts here at 44 1/4, 45, right? I sell a few contracts short, and I'm going to use the top of that candle just near 46 as an out. And I shorted like a couple of little micros at 44.33. And I'm going to put a buy order in at 41 3/4, a buy order in at 42. And I'm going to be covering as we come in. Now that's not a bad little short, right? You saw the seller step in here. Now I didn't execute until we got underneath VWAP. And as soon as I was short, I put those bids in and covered. And what I'm doing is I was shorting the backfill. Now, the trade was based on the assumption that there would be sellers here. And indeed there were. Then that next red candle opened under 46. That was beautiful. So then you know you're going to get a little bit of follow through down into that 42 level that I was talking about. But we stopped short of 39 and 3/4. Couple of points here, a couple of points there, it adds up. It's not rocket science, it's just repetition. My risk on that trade would have been, I would have been out of it if we got over VWAP over 46, 47. Then there's no sense. If they're offering it higher, you've lost your seller. Once a market has lost its seller and enough people are short, that's when you get those big ass green candles. Like if you were shorting it here, right? We're shorting the front end of that move. Do you see these two big green candles? Those are the worst. Those are the absolute worst when you're short. That's why you want to wait for the back end of the move. Now, okay, we're open. So we open, go down to that cost basis. So what I'm looking for is a long, and I might miss it because I want to look below and fail at 39 and 3/4. But I'd like to wait for this candle to close before I go long. See? And if it doesn't come back over 39 and 3/4, then I'll be looking for a look below and fail of 33 and a half. But in the middle, I will leave it alone. So now I know to wait. And I'm waiting. Oh, bastards. See, and there you miss it, right? See that I was waiting for it to come under 33, right? And it didn't even get under 34 and 3/4. Boom, right back up. That happens, right? That happens. So now they're going to sell into it. See, Jesus, big candles. There's 33 and a half. Do we look underneath and come back up? Because if we don't, then we're going to start going and taking out these lower stops. Is that clear? Do you see that? Folks, are you seeing that? There you go. So I missed that trade, that really quick long trade. And I thought, okay, maybe it comes down and it looks below again and fails. Then I can go long when it comes back over 33 and a half. I'll wait if it comes back up over 34, right? I'll try and buy one at 35 and a half. Put my stop at 34, which is what I just did. I'm long 35 and a half, and I'm stopped out. Not the greatest execution. Right? My timing is a little off. Okay? So if I'm doing that again, I should wait till we get back up over 33, 34. Man, there's a seller there. See, there's a seller right there. See how there's the seller there? Every time we get up to 33 and a half, where I'm looking to buy, there's a nagging seller. Once we clean that seller out, I can try and buy 34, 35 and make sure that I sell 36, 37. But right now, I'm wishing because that's not what's happening. So that's the trade I was looking for. And the market's telling me, JJ, that ain't going to happen. So then as soon as you see that, just relax. Don't force it. Don't try and make it happen. Don't try and catch the bottom, right? Just wait until it happens, or wait until we take this and go to 2 times discount. Okay, so we're at 1.5 times discount. 2 times discount means down here at 21. You guys get what I'm saying? So if I had just started trading and drawn this cost basis, right? So we went right to the middle of the next one, back up, and as soon as the market gives me this green candle, what am I thinking about? I'm thinking about, where is the seller? Where are those bastards? I know they're going to sell into it because I used to sell into it. When the market comes back up, we're all waiting, right, to sell into it. But if there's too many of us selling, it's not going to get back up to the top of that candle. You can save yourself a lot of money. There's sellers at 33. There's sellers at 29 3/4. Now let's see where the bastards are. Right? They're at 27 1/4 now. They keep lowering their prices. Why? Why do you lower your prices? You got to get rid of your inventory. Otherwise, somebody else is going to take your client. So let's see if they slow down on the selling at 2 times cost basis. Because if they do, we can look for a long trade back up, knowing full well that there'll be a seller here and here. Okay? So if we're going long, make sure you sell into strength. If you're building a long position, wait for the next candle. See if we get any lower. You can get some cheap stuff down here in the 20 to 26 area, and your out will be 21. All right? So here you go. See, you can see that seller at 27 1/4 is still there, because every time you get there, boom, it gets hit. It's very simple, but nobody talks about it. See, there's a seller right there at 27 1/4. Now we clean that seller out. So the people who are long these candles, they're already selling. They're on the offer, right? They are selling as much as they can because they want to get out of that inventory. That is a momentary lack of supply. The supply shuts off under 24, and a couple of people come in to buy, some people come in to cover, and the people who bought 24 to 27 raise price to 29. And there they sell into it again. That is how price action works. That's how markets work. That's the mechanics of how price moves. It's not really anything more than that. It's very simple. The sell orders take the market under a level. The sell orders are done. The market rotates back up. See? So those wholesalers who are long 26, 27, they're selling the 28, 29, 30s. You can see they're long at 26.5, right? Because you can see the point of control here. So take it and sell it. Put it on sale, and hopefully you can do this and coax people into buying. See? Taking out that seller will target the 32, 33s. Hey, I don't trust it either, Travis. But if I can get in, if it gives me 60 to 90 seconds, it gives me enough time to get in and make a couple of bucks. You know what I mean? That's my mentality until the war is over. Right? Because the order flow is not, it's not at all reliable, and the news cycle is very sensitive. I want to get in and out of trades. I want to do business differently, right? I think about it as doing business. So I want to be doing business where I'm not at the mercy, right, of these headlines and stuff. I want to be doing business in and out. Holding is hard. You have to have capital and you have to have the presence of mind to do it. Now, a couple of times this week you've heard me say my discipline was lacking. So when my discipline is lacking, I'm going to scalp. Because in case I screw up, I don't want to lose a lot of money. Right? Now, if that doesn't make business sense to you guys, you shouldn't be doing this. Because if you have no self-regulating feature, right, it's very important. When you're dialed in, go ahead. You can trade size, you can do all sorts of things. But if you're not dialed in, if your mind is kind of like elsewhere, right? If you got, I have somebody sick back in Canada, so it's kind of stressful, and so your thoughts are kind of, life gets in the way. When it's like that, trade small. You know, there's nothing wrong with that. You have to manage your business intelligently, so you're not just unnecessarily throwing capital away. Right? Very important. Right? Remember, we are humans. We are not algos ourselves, unfortunately. So sometimes you're in a bad mood, you're sick. I have this stupid heart palpitation thing, and when I get like a when I get like any kind of a virus, my heart just goes into arrhythmia like 20 times a day, and it's like running a freaking marathon because your heart's running at 150 beats per minute. So when I'm like that, I don't trade size, right? Because I'm tired. I don't want to make mistakes and lose money in my client's account just for the hell of trading. Right? So right now we're here, we're building that cost basis. Now, Travis, you said that you don't trust that low here. I'm right there with you. I don't trust it either. So let's see if we can come down and tickle that 66.12 low. Nice work, Doc. And it's okay to not be dialed in. We're not machines, right? All right, we're cleaning out that 29.30 seller. We're looking for 33 and a half. We're going to take the product that we bought from 25, 27, 28, 29, sell it over 30. That's what the wholesalers are doing right now. See? Ran out of buyers at 32, had to put it on sale. Where are they going to put it on sale? Right back to where they bought it. Make sense? The chart is charting the business of distribution. That's all we're doing every single day. Accumulate, distribute. Accumulate, distribute. It could be a chart of spices or coffee or whatever. It's just a chart of the sales of a product. Here it's ES contracts. Look above and fail of 33. Oh, right back to cost basis at 27. So once you get quick, what you can do is You can take shorts at 32, stop 33, cover 29.28. You can go long 28.29, stop under 28, and sell into the 32.33s. Right? That's what scalping is all about. Now, once it clicks over 33 and a half, now will it be nice enough to come back down and let me buy some at 34? Right? Because what I'd like to do is I'd like to put in a buy order at 34, maybe 34 half, and then sell some at 36 and a quarter, right? And 37, and just make a couple of points without causing too much of a stir. Right? So let's see if it holds 66.33. Would even be better if it comes underneath 33 and comes back up. Watch the offer. And you're watching the offer. See how the offer is coming down underneath 33 and a half? Now it's back up. So if you're going to go buy it, you put in a bid and you buy 34, 34 and 3/4, right? As soon as you've got a long, I'm long 34 and 3/4, and my sell order is at 36 and a quarter, and I'm out. And if I had any more contracts, I would have put them out at 37, 38, 39. And this, just let them take you. Right? Do you get that method of trading? That is a look below and fail. Here it happened in one candle. Because everybody who got short under 30, when it got over 34, 35, they realized, crap, we got to go cover. All the inventory's at 26, and then you get that big move back. And it hasn't been the first time it's happened tonight, folks. Right? It's happened here, and it happened here. It's been happening. You guys called them V-shaped recoveries, right? But that is just rotations. And they're beautiful to trade once you get into the rhythm of the rotation. And that is not a song by Gloria Estefan. Right? It's the rhythm of rotation. Oh, man, tough room this morning. Feel like Rodney Dangerfield. Right back to VWAP. Oh, boy. Today's great too, Raj. It's been beautiful rotational trading. You just have to be dialed in. You know, when you're getting these rotations, right? When you're trying to get them, don't feel bad if you screw up here and there and get stopped out, right? You saw earlier I got stopped out, and it's just not. Just move past it, learn from it, right? Yeah, there you go, right? 40 to 37, beautiful short truth. Beautiful, right? Textbook. You saw the seller, you said, hey, you're going to sell a bunch of contracts. You mind if I sell a few next to you? Sure. You're going to push the market down? I'm going to cover, and don't worry, I'll buy drinks, right? That's how business works. Beautiful. Right? And when you get candles that are big enough, and if you're really tuned in, you can try and actually scalp the candles. Now, I do recommend that you're really on the ball when you try and do that. Give it a try a couple of times, and if it doesn't work, then just don't get stuck into it, because it means you're off or your timing's off. You don't want to blow up your account or unnecessarily trade. But if you have candles that go from 28 to 38 in 2 minutes, you can do a couple of trades and then just be done, right? And you see when we came back down from VWAP at 42, we came all the way back down to 29, and we stopped short just here, right? We stopped short here, and the position is here. So the position is this, folks, right here. That and that are the same thing. And all we do is we just keep grabbing it, selling it, bringing it back. Grabbing it, selling it, bringing it back. Good stuff, man. Good, good. You know all we need now? It's just the market to stay like this for a few weeks. You know, just some nice, quiet back and forth price action and no drama. That'll be nice. Of course, I'm completely delusional. Oh, man. I have a beer story. Last Friday, I went to a St. Patrick's Day party in our building. Seeing we're right back down. Look to see where they stopped selling. Right? Remember, the point of control was here. Remember? It was down here at 26. They just moved it up here. So if they get into trouble and they really have to sell, they'll come back down to their original cost basis. I went to a St. Patrick's Day party, and somebody gave me 2 beer. I haven't drank in a long time. Oh my God, after 2 beer, I was just like, time for a nap. That was it. Point of control moved right back down to 26. Now, after these distributions, are we going to hold that 22? I think it will break. If it breaks, the trade I'm looking for, and I'm calling it out in advance, the trade I would like is a look below and fail of yesterday's low or the overnight low. Right? So currently here, I have no intention of buying it unless it comes back over 21. But I'd really, really like for this or this to happen. That would be perfect. So I'm looking for a look below and fail of 12. Or 7.5. Now it might get back up over 21, 22 and rip all the way to 24. For some reason, I've got a short bias here. Not to short it, but to really, really wait until an extreme to wait for a long. Where I've gotten in trouble is trying to pick a bottom. That's where I've always gotten into trouble, by being early, by trying to get in too early and pick a bottom so you can get the best. Just wait. Right? Because now we've got a couple of bids. I want to see where they sell into this. Where are they going to sell into it? I'll wait for this next candle to open, and it's going to tell me, okay, now I know that there's a seller at 21.5. I'm going to wait for the next candle to open and tell me where the next sellers are. See, look, did you see how we got up to 21 and boom, pushed right down? Go rewind that. Go rewind that if you really want to learn this business. You don't need any technical indicators. Watch the offer. Right? The offer, every time it comes up, somebody pushes it lower. That's selling competition. That keeps you from wanting to go long. See? Right? We called it when it came up here and boom, There's an aggressive seller at 21, an aggressive seller at 20. Now that you've got seller aggression at 18, 17, 16, you're looking for that stop at 14, right? You're looking for that stop and how the market handles it. See how there's short covering before that stop. Now you should be thinking, where are they going to sell into it? Okay? See how they sold into it at 19 3/4? Folks in the room, are you guys getting this? Give me some feedback. Does it make sense? I mean, I know what's going on. I want to make sure you do. Right? I know what they're doing. Do you? Right? And it's so simple. It's so simple. You can see that there's a seller at 20 and a half. And when you get back up to 20 and a half, look. See? Look at that. So if those sellers see buyers, now they're going to come back up. Watch that 21 area. Wait for the next candle to open. And if you're looking for a long, you want to make sure, because it's so volatile, I'd wait until we got over 21, 22. I mean 23, yeah, up over the top of that candle. Then I know that the sell orders, because otherwise that big candle, a big seller, so you could easily buy 22 and get stopped out here, right? Very easily buying 22 against 21. You're getting stopped out. See, now it's going to come back down and test that A low, or try to. Right? It's okay to be early on trades and get stopped out. Just don't start adding to the trade. If I went long 21 on one micro, I got stopped out at 20. I went long at 22, got stopped out at 21. Right? There's no way I want to be long at 15. So wait till it gets to this stop now. Big green candle, where are they going to sell into it? They sold into it into 22. So now you know that there are sellers at 22. So if this thing does a look below and fail, previous day overnight low, and you went long, say 13, 14, if it did a look below and fail of 12, then you know at 22 there's going to be a seller. Watch. And this is how you can think through the process, because you actually know what's going on. Right? None of this is random. You can see the size coming in at the low. That's short covering. When we take that stop, some buyers are going to come in. Where are they going to fill those buyers? 15, 15 and a half? Nope. Lower. This you watch. This you don't participate in. That means you shouldn't. Howard, you should only be trading long right now. You're doing really well. Just stick doing what you were doing the last week and the week before and the week before. Don't change a thing. Okay? And sorry, I didn't see your message until it was later. Looking for the previous day low now. There it is. Now, it's going to break that. Does it come back up? Splashes it. If you're long the previous day low in the 12s, make sure you sell into strength because I don't know where the seller is going to be. They're still selling. So wait till it tags that overnight low. Next target. Remember I told you about 5-10 minutes ago that we were going to come do this. It's okay to try and catch a bounce and be wrong. Just get out. Don't keep adding to the bounce and losing all your money. Now there's the overnight low. Let it sell off. Let the shorts come in. And new traders, if you really want to be sure, wait until the market gets back up over 12. Okay? You can let the large traders work this area out and then go long 12 to 15, 16. But let the large traders manage this business and show you that there is support, show you that the selling has stopped. Right? Because that's how you get into trouble. You buy, you add, your account is gone. Right? See how there's a seller at 6607? As soon as we got up there, whammo, they hit it. Now we cleaned up 6607 to 8. There's a seller at 9. Back down under that overnight low. B period opens. That's short covering coming in. Now, if we stick that overnight low and you're long, say you didn't listen to me and you went long, well, you should have sold. Right? Because we're letting the market tell us where the low is going to be. Give it a little bit of time. That's what I said. Let the large traders work this out, and you want to go long over 12, 12 and a half. That's a better long for you. Unless you want to wait down to this 65.94 level. Right? I'm picking what from? Truth? The overnight low, man. The overnight low to the previous day low. Let the large traders clean that up. And then go long 12, 13 to 15, 16. Oh, jam swing low. Oh, I have no idea. Sorry. It should be stored if the order flow agrees with us, right? So that's why just let it sell off. There's no reason for you to even try and call the bottom, right? There's no contest. You don't get a trophy, right? There's no medal. There's no free ice cream sundae. There's nothing. Let them look for the bid. $6,600, nice round number. Yeah, it's not Vegas. They don't give you a free hotel room for losing 10 grand. So we just tag 6,600 to the tick. How mechanical. Yeah, let them work out that overnight low. Now, when you get up to that overnight low, there's going to be a seller. There they are. They're right there. There's the previous day low. See how there's a seller at the previous day low? These are very mechanical markets. Alrighty, folks. So, for me, the trade I would wait for is we get over 12.13. They're still going to work this out. Let's go look at some levels on a longer term chart. You know, staying under the previous day low, we're targeting, it's just 10 points down on each level. Failure to, you know, we basically did, for larger time frame traders, we did a look above and fail of 67.88. The target is 65.47. So that's our ultimate target, is 65.47 half. Okay? And if we fail to get down to 65.47 half, what happens? If we do this, then we'll get a move back up to that 6,700 level. Okay, very simple rotation as the market waits for more information. All right, we're starting to put a little position together here. Let's see if that holds. Okay. That's pretty much it for me, folks. I'll leave you with that. We're starting to creep back and try the previous day low again. Remember, go ahead, Ozzy. Remember, if you are going long over 12, that there will be a seller at 14 3/4. Did we have a date for reading statements lab? Reading financial statements? Like reading securities filings? I didn't get a lot of feedback on that. I'm working on like an investing course, a swing trading course, and how to rip apart public companies. But I think you're the only person who's really asked for that. Most people hate reading 10Ks and Qs. But if you guys are interested, definitely. And I have a secret weapon on that. I have somebody who actually writes them in our room. We can lean on him. Alrighty. There's that previous day low again. There we go. Oh, look above. Back down. See? Now it's starting to get spicy. Now, you know, now the chili's almost ready to come out of the pot. So if we take out 14, 15, you're looking for the 21s. But just wait, because the problem is there's all of this liquid inventory between 4 and 8, and they're going to be selling it at 10, 12. They'd be idiots if they didn't. You know? So try and wait until we get that rip back up. Footnotes are important, Alexander. All right. Thanks, everyone. Have a wonderful weekend. Stay out of trouble. We will see you on Monday, bright and early. Trade safe. Don't take any candy from strange market makers. Thank you. Appreciate you guys. Have a wonderful weekend. See you on Monday. Bye for now.